Hi, I'm Pat McGibbon, the Chief Knowledge Officer for AMT, and I'm here with the Daily Minute. The one that comes out on Mondays typically is a little bit more economically oriented. And I appreciate that today I get to be the bearer of some pretty good news. Two late week releases on the economic outlook for our key leading indicators, I guess we could call them. The first one was housing starts. It came out last last Wednesday. It was at 1,544,000 units in November. I'm sorry, in October. And that's phenomenal. Now, it's down from where it was in September. September was another 1,000 units larger, 1,545,000 units. What's significant is that outside of those 2 months, you have to go back to March of 2007, to find housing starts at that level. It certainly means that the housing business is moving at paces that are very comparable to pre-COVID. And as I've said a million times, that pushes so many pieces of durable manufacturing products. Everything from the construction pieces, to the machines that are used to build the houses, and the appliances and cars that build those houses, and of course the electronics the kids bring into it after the house is bought and filled with a family. So it's heartening to see that kind of continued growth in housing starts. Again, one of the top 10 indicators we have, and I think that you keep an eye out. You'll see the top 10 indicators by AMT posted very soon in our newspaper. We're on amtnews.org as well. The other piece that I thought was pretty interesting was late, and this is on Friday. IHS, one of the economic houses that we work with, comparable to ITR with Alan Bellio and Oxford Economics, where we get Mark Kellyan from. IHS published their flash purchasing managers index numbers for November. Sorry, for November, and it looks like that they came in around 56.7. Now that's up significantly from 53.4 in October. What I really appreciate about that particular index is not only is it getting larger, and anything above 50 suggests expansion, and if it's significantly above 50, it's showing faster expansion. So going from 53, where we were in October, to 56.7, basically 57 in November, suggests that our growth in the manufacturing is going on a little bit faster pace, and we're moving very soon closer to where we were as a sector, manufacturing, in 2019. But what I thought was very promising is the pieces of the composite that helped moved it up from 53 to 57. Right at the top of that was export orders. Export orders have been lagging quite a bit during the downturn. Part of that has to do with the challenges with international trade induced by tariffs and trade wars. Some of it has to do with shipping issues and supply chain issues related to the pandemic. And some of it had to do with the people rethinking where they were purchasing their products over time. So seeing export orders move up and help that part of the composite be a significant contributor to the growth was very promising. Also, we seen a significant increase in backlogs, probably the largest increase in backlogs since 2014. And this has to do in part with not only increased demand, and we see that not only in manufacturing, but we hear from our members as well, that quotations and order activity is starting to pick up towards the end of the year. But it also suggests there should have been some significant job growth, and job growth didn't jump as much as most economists expected. And from our perspective, that lack of growth has to do with the amount of automation that was acquired and is being acquired and planned for future acquisitions by the manufacturing, particularly durable manufacturing sector. So people are going to be a little bit more cautious about pushing their employment numbers back to what they were. They're going to look at alternatives, and the alternatives is the kind of equipment that U.S. manufacturers, manufacturing technology provide. So it's going to be giving a pause for thought for what their investments are going to be in. There'll always be investments in people, that's for sure. But there may be a little bit more of that investment money and more thought about what they're going to invest in with the capital equipment that they need, and looking past traditional technologies into future technologies. The the other piece that I would point to is the New York Federal Reserve's weekly economic index. Its economic index leads the economy by about 2 to 3 months. And one of the things that was promising about it is it looks like we finally have hit bottom, and we've seen some of the first numbers showing that we are moving forward towards growth, and that will be soon hitting a stride. Again, that index, if you want to take a look at it yourself, is available through the New York Federal Reserve's page. You just put in the New York Federal Reserve Weekly Economic Index, and it'll pop it up for you. It's got some great graphics, and then it also gives some fantastic analysis about some of the underlying composite elements that make up the index. Most of them very positive and have a very strong impact on manufacturing. So that's some really good news for this week as we close out November. And let me suggest that you may want to take a peek at tomorrow morning. Leadership Viewpoint. We're going to have Ralph Hagman talk about the distribution network and his experiences from building his own company to helping new entrepreneurs grow into their companies. Again, a pitch for getting go back and take a look at the AMT forecast programs. Very, very interesting. I just got off the phone with one of our members, and we were talking about the challenges of 2021. There seems to be significant growth, but you got to take a look at by sector. Two key sectors of our package of people who consume manufacturing technology, that their total share, their share of total orders based upon the last 10 years, more than 30% of the total. And that's those two sectors together, not gonna see a whole lot of growth between now and a year and a half to 2 years from now. And it suggests that they will be half that number. So that means 15 points right off the top that aren't going to be available. But we have some interesting replacements. Recreational vehicles has come on strong here in the past 3 months, and has looked to be fairly strong going into the last quarter of this year and into the beginning of next year. Firearms have already, as I said before, got to their 2019 levels in August, and all through the Southeast and the West and Northeast, you're seeing a significant pickup in capital equipment investments by that industry. And then there's a handful of others, too many to go through here. Again, I encourage you to take a peek at the MT forecast information. It's very useful, and Chris Downs did a fantastic job of putting together an excellent cast of characters to help us understand about what's going on in not just the manufacturing technology market, but manufacturing as a whole. So until next week, stay safe, stay busy, and we'll have hopefully some more good news to continue on into the end of the year. Take care.